Hi, welcome to the Mangala Samiti podcast, where I talk about business, life, personal development, and other ideas that matter. I am your host, Mangala Samiti, and I am many things: a chartered global management accountant, CFO, author, voiceover artist, and so much more. But I really am just one thing, and that is a creator. I create content and solutions to problems and challenges. I hope this podcast will help you on your own journey to greatness.
I want to thank you so much for tuning in. This week, let's chat about your company and tax. So, as a result of COVID or otherwise, you've decided that you want to start your own business, and you've gone ahead and registered a company, which is a PTY Ltd, which is a proprietary limited, with the Companies and Intellectual Property Commission, or otherwise known as CIPC. And as part of this registration of the company, the CIPC also automatically generates a tax number or registers your company for tax with the South African Revenue Service, otherwise known as SARS. So whenever a new company is registered with CIPC, it is also automatically registered for tax with SARS, and you obtain a 10-digit tax reference number that starts with the number 9. However, the registration for tax for your company is not the end-all and be-all of what your company's tax obligations are. So when it's registered for tax, there are other obligations that you need to fulfill as part of running your company. So there's a number of taxes that you need to register for, and that whose obligations you need to fulfill as part of running your business. That will depend on the growth of your business, the size of the business, and some of these taxes will include the VAT, or value added tax, which is effectively right now at the rate of 15% on all sales that you do on your business. The requirement for this tax is when you reach a turnover of more than 1 million rand. So 1 million rand or more, you are therefore required to register on a compulsory basis for VAT. However, you can also register on a voluntary basis for VAT when your business hits an annual turnover of more than 50,000 rand. Then there's also the payroll taxes, which involve the PAYE, which is the pay as you earn, the UIF contribution, as well as the skills development levy. Then there's also other taxes such as customs and excise that you may also be required to register for depending on your operations. But once you register your company and it's automatically registered for tax, the one tax whose obligations you need to fulfill is the income taxes. And part of the income taxes, there's also another tax called provisional tax. Now, provisional tax and income tax are not seen as two separate taxes. The provisional tax requirement is that once you start running your business and you start generating income, you have to pay tax on an annual basis. But SARS gives you the opportunity, rather than incurring a large tax obligation, a large tax debt at the end of the period, it allows you to pay that one tax in two separate installments, which are the provisional taxes. So you pay the first provisional tax 6 months after the beginning of your year of assessment or your annual financial year, and you pay so the first provisional tax is within the first 6 months, and the second provisional tax is then paid within the next 6 months, or the last 6 months of the year. So let's give an example. If your year end is from 1 March to 28th of February, your first provisional tax is due to be filed and paid by 31 August, which is the 6 months between 1 March and 31 August. Then your second provisional tax is required to be paid between 1 September and 28 February. So once you then pay those two provisional taxes, once the financial year ends and you prepare your financials, then you can then file your income tax assessment, and you would have already paid your two provisional taxes, so you don't have to then pay a large tax obligation at the end of the period. Then there's also something called the third provisional tax, which is something that SARS has also implemented to give you some form of a relief. Now, the third provisional tax is due 6 months after the end of your tax year. So remember, your financial year is running from 1 March to 28 Feb. You pay your first provisional tax between 1 March and 31 August, and then you pay your second provisional tax between 1 September to 28 Feb. The third provisional tax can be paid after the end of your financial year between 1 March and 31 August. And here's the kicker. When you finalize your financial year, because your provisional taxes are based on forecasts, meaning it's not on a certainty of what your business is going to generate. Your provisional taxes are more of projections or forecasts that you do as to what your tax obligation is going to be when you file your income tax or when you prepare your financials for the financial year. So it may turn out that the estimate that you made when you filed your two provisional taxes is different from the income tax, your actual tax obligation after you finish your financial year and you prepare your financial statements. It may turn out that there's a difference between what you estimated as part of your provisionals and what you actually have to pay as part of your income tax once you have done your full and final calculation based on your financial statements. What SARS then says is, or what SARS allows you to do, is the difference between the estimate and what your actual tax obligation is. In order to prevent any penalties or any interest, they give you the option to file a third provisional tax to increase your provisional taxes that you have paid to SARS, so that when you file your actual income tax, there is no difference between the income tax that you filed and the provisionals that you have paid. And that way, SARS will not charge you an understatement penalty for understating your provisional tax. So you do that, you catch up in the third provisional tax. And this is very important to remember, because a lot of people are not aware of these third provisional tax, and they find that they'll go and file the income tax after underestimating their two provisional taxes. They go file the income tax, but then SARS hits them with a 10% penalty on understatement or an underpayment of their provisional tax. It is because they did not file the third provisional tax to catch up the difference between what they estimated and what the actual tax obligation is after the end of the financial year and after they've calculated their tax obligation. So that's the requirement for your income tax. Now, when you register your business, there's a party that the directors on the business that are registered with CIPC need to appoint, and that party is called the public officer for the purposes of filing and ensuring tax compliance with SARS. SARS has now made it a mandatory requirement, which it always has been, but SARS has now just begun to enforce it to ensure that each and every business has a registered public officer. So when you register your company with CIPC, the directors that show up on the core 14.3 or on the registration with CIPC or CIPC need to appoint a public officer, and they have to pass a resolution appointing someone as the public officer who will be responsible for ensuring tax compliance of the company. And once that appointment has been done, the public officer needs to go to their nearest SARS branch or otherwise use the online service on the SARS website, sars.gov.za, and the update registered representative service on the SARS website to appoint the public officer. And there's a couple of requirements that the public officer will have to provide to SARS in order to be then updated as the registered representative, or as indeed to be registered as the public officer on this company. The public officer is the party that ensures tax compliance and ensures that this company is fulfilling all its tax obligations. So even when you're small, even when your company is generating a nil return, is generating no income, zero, the company still has an obligation to file its taxes with SARS. And whether your company is generating zero, whether your company is generating 1 rand, whether your company is generating 15 rand, 50,000, 100,000 rand, you still have to file a tax return. So when you've started the business, and this is something that entrepreneurs will tend to overlook. When your business has just started, you think, no, because I'm not generating any income, so I don't have to file my tax. No, you still have to file a zero tax return as part of tax compliance. If it is found by SARS that you are not filing your tax returns, SARS may start to issue administrative penalties for you not fulfilling your tax obligations. Now, there's a lot of things that go into compliance and registering a company with the CIPC. You have to comply with the Companies Act. You have to be familiar with it. You have to comply with the Income Tax Act and the requirements that are then enforced by SARS. There's a lot of compliance. So I wouldn't end this without telling you to get someone on your side who's a tax professional, who understands compliance and who understands taxes, and who can assist you with ensuring that you fulfill your tax obligations as and when they fall due. Now, part of the role of running a finance function is to ensuring, or part of my role of being a finance professional is ensuring that the business that I work with, Jaltec in this instance, is fully tax compliant. So you may want to get a tax practitioner so that tax practitioner can help you fulfill your tax obligations as and when they fall due. You may also want to get somebody who's a company secretary to also assist you with the requirements of the Companies Act and ensuring that you're also fully compliant on the CPC side. I want to thank you so much for tuning in. As you embark on your journey, on your entrepreneurship journey, you've decided to register your small company, or you've decided to register a company so you can effectively run your own business, and you are ready, locked and loaded to start this journey to fulfill the vision that you have. I hereby commend you. If you have any questions, any thoughts, or any ideas at all, please do send me an email on mangaliso.meaty@gmail.com. I'm really glad and happy to receive all your feedback to date, and knowing that this podcast is making some sort of a difference in your life. Thank you for all the support to date. Until next time, have a great week.